Hey guys, how's it going? So in today's video, I'm gonna be discussing Aurora, Canopy, Tilray. Why a question came up in my YouTube channel why I'm bearish on Aurora stock. Why did I sell off? What's the reasoning behind me selling off? And I'm gonna try to explain it in this video. I don't know how well of a job I'll do it, but I guess I'll explain it. But before we begin, I just want to promote chocolate fondue. I actually really like this brand. I probably will get more in the future. Not just because it has 7.7% THC and 0.7% CBD. I couldn't care about that. That's funny how things work out like that. Maybe it was a marketing scheme. I have no idea. But I do like this. I think it smells like, I think the cannabis smells pretty good. And then when you smoke it, it's like when you roll it into a joint, it kind of feels like a cigar. Like you're kind of like smoking a cigar a little bit. That's a unique taste. Like I enjoyed it. I think it's definitely a recommendation from me if you haven't tried it. I like this product. But every chocolate fondue might be a little different. It just depends on the plant, and yeah, that's it really. Oh, 666. That's not good. Okay, I guess that was just an error. So as you can see, this is after hours. This is 36 minutes after the market closed. So the market is completely closed today, and Aurora is down 2 cents after already going down so much already. So we might have a bounce here, but I don't know. I'm still bearish on the stock. I still think the stock can go further down. That's just me though. But I guess I'll explain why later. Tilray, Tilray has earnings today. It wasn't bad. You can read it. Well, they lost money and they made 10 million US, about 13 million Canadian. They're making slightly more than Aphria, but they're still at a big loss. Their gross margin is mediocre. Mediocre for a weed company anyways. It's still like higher than Namaste. But I thought the stock would sell off way more, but it's not. And it's kind of up floating because I honestly believe that rich people are backing the stock, and it's almost impossible to short the stock because it's so expensive. The interest rates on it is like ridiculous. Unless you're shorting a very small amount, like 50 shares or 100 shares, but you're still paying a lot of interest when you're shorting Tilray stock. CGC also down quite a bit. Down 22 cents. Oh, sorry. I'm an idiot. Canopy growth is up after hours. Man, I should redo this video, but you know what? I just don't care too much. So that was just me fucking up. But yeah, Canopy growth is up because they're having the earnings tomorrow, and they're gonna be releasing in the morning. I don't know what the after hours is gonna be like early in the morning before the market opens, but I'm definitely interested. I'm gonna be discussing my prediction for Canopy's growth earnings. So I'm so glad I sold off T-Guard because I was thinking the stock was gonna continue to go down. I knew that it was impossible for the stock to recover to $4.20. So I decided to sell off, and now the stock's dropping to $3.37. I think that the stock can go down further. I'm not gonna buy any yet. I think the stock can go down below $3. Definitely gonna pick up a little bit at $3, and then from if it keeps falling from $3, I'm probably gonna be adding on to my position. I'm calling it now. I think T-God stock's going down. I mean, I would have. If I had a margin account, like hypothetically, I'd probably short it around here. Because the stock dropped on Aurora's earnings, I read the earnings and I was like, okay, you know what? I think it's probably a good idea to short the stock. Probably around here. I wouldn't short very much, maybe like 1,000 shares short. So that's that's what I would have done if I had a margin account, but I don't. So June, you know what? I'm an idiot on this. I could have. I was thinking that this stock, like, I could have sold out the stock around 80 cents. Like, I could have just went in. I could have sold off a big position at 80 cents because I had a feeling that this stock was going to decline even further. And I was correct. It went down to 73 cents. I should have just took my loss and then bought when it went down further. Will it continue to go down further? I think Zoom stock will continue to go down further. I have a bear mind on it. It's kind of strange. It's like as soon as Zoom becomes a safe company, people start selling off. Like, I mean, I'm not talking about people. I'm talking about big people, like investor people, like people who have lots of money. They're starting to sell off on the stock, and people that don't know any better are buying this stock, like me. But you know, I think it will end. The bleeding will end on June eventually. But you know, for me to see it rally back here, it might happen, but it might take a while. It might take like a year before we see this stock go back to maybe $1 level. So I'm saying that I believe that this stock is gonna go all the way down to like 50 cents. Just my opinion. So we'll see what happens, but I think the stock can go down to 50 cents. If it goes down to 25 cents, I would be a big buy because I mean it is hypothetically possible for this stock to go down to 25 cents. There doesn't need to be a reason for it. It just, you know, investors can just sell off and just, you know, attempt to get the stock price to go off to down here. If it ever does go down here, at this point, I'd probably make a big investment. I don't think it will, but there's always a possibility that this stock will go back to 25 cents. We'll see what happens though, because you know, it takes a decent amount of money to pump the stock up because it has 178 million shares. So it still takes a rich person to move this stock up, in my opinion. But I'll definitely be a buyer when this stock goes to 50 cents, and if it goes down to 25 cents, I'll be another big buyer. Right now, I'm just gonna hold off and I'm just gonna wait and watch it, and I'm not gonna agree with this company. If it does drop down to 50 cents, I'll make a big position, and if it drops down lower than 50 cents, I'll make even a bigger position on this stock. So, and then if it goes up to 80 cents, if it does, I don't think it will. I might sell off and take some loss because I think if it rallies up to 80 cents, it'll be like a temporary rally. I don't, unless this stock rallies on news, on really good news. I think management basically stopped caring because they're basically being bought out by Aurora, so they don't have to care as much about promoting the stock because at the end of the day, June will become Aurora. At least that's why I believe down the road, down the future, because Aurora has an option to purchase June, 40% of the June. So we'll see what happens, but that's what I believe for June moving forward. Acreage Holdings. Acreage Holdings is also, you know, moving into the Canadian Security Exchange tomorrow. I have it here. I think it's tomorrow. It says additional detail regarding foregoing providing a listing statement filed with the Canadian Security Exchange on or about November 14, 2018. So it's either they're going to be announcing a date tomorrow or they're going to be listing tomorrow. I'm not too sure. Please comment below. Tell me what exactly is going on. And they're going to be IPO at $25. So 25 US dollars. So we could be looking at a $30 price tag for Acreage holdings on the Canadian Security Exchange. I don't know what the market cap will be at. I mean, they raised a decent amount of money. I'm just gonna wait for the stock. I'm not buying it. I need to figure out the market cap of this, so I don't exactly know what the market cap will be for Acreage Holdings when it IPOs. I don't know its assets. I don't know its liabilities. I need to know more information before I'm gonna invest in the Acreage Holdings, especially if it's gonna be IPO at, you know, $30. I mean, I could put in a small amount, like $3,000, $5,000, and then if it rises like dramatically from my $25 from the small amount I put in, maybe I'll sell off. But I'm more bearish on this stock when it IPOs. I think it's gonna the stock's gonna plummet. We'll see what happens though. I mean, if I had a margin account, I probably would not short this stock because it probably scares the shit out of me, and it's probably expensive to short because it's a brand new IPO, and usually the more volatile the stock is, the more expensive it is to short a stock. Essentially, that's how it works. So I'd probably stay away from this. I'll just watch it, and you know, we'll see what happens in the future. Okay, so somebody wants me to discuss. Okay, so talking about why I'm bearish on Aurora. First of all, Aurora lost a lot of money this quarter. Yes, as they said that they flipped a net profit of $104 million. Because they, you know, the reason why they have a $220 million profit right here, and you subtract $119 million of all these expenses. So, you know, they have a research and development, $3.5 million for research and development per quarter. I guess that's not bad. Well, anyways, let me pull up MetroLeaf here. So this is Canopy growth. I'll talk about this later. Oh, I haven't pulled off the MetroLeaf yet. Oops. Okay, you know what? I'm just gonna explain it. Screw it. So MetroLeaf had about $220 million of cash on the asset balance sheet, and then when Aurora acquired them, they acquired the cash too, and the cash is a marketable security, so they're allowed to put that on the income statement. If it wasn't for the MetroLeaf merger, they would be at a huge loss. I mean, it would be a lot less than this because there was acquisition, merging fees, and all that. So that's the reason why this is so high. It'd be a lot less than this, but without the MetroLeaf merger, they would not be flipping a profit. They would be like a negative $50 million. So I don't know. I don't think it's that good. And then on top of that, you know, the cash, they don't have that much cash too. They have $150 million of cash. I mean, it's not bad. It's not bad. I'm not saying it's bad, but you know, the marketable securities is making up, you know, that half of the cash. And T-God stock is part of that marketable securities, and T-God stock has declined quite a bit. Will T-God stock, like, and the further it declines, the more risky it is. So if T-God stock goes to like $1.50, you know, I don't think it will. I think there'll be way too much support around like the $3 level or below the $3 level. So that's what I think for T-God stock. So I mean, the worst case scenario, I can see the stock hitting $2 in the short term. So I mean, but the chances that the stock goes to $2 and stays at $2, that would be really bad for Aurora, because Aurora is relying on the cash that's in T-God to keep execute on the strategy. But you know, so. And then on top of that, I mean, their next earnings report is going to be very good. I mean, I think it's going to be in the range of at least $100 million for the next quarter, because it's going to include probably like $100 million plus of rec sales. So we'll see, right? We'll see. I mean, I'm not too sure on this. My guess was there was going to be a lot of rec sale in this, and the numbers were just way below my estimates. So, and they say they're going to be cash flow positive next quarter. I mean, some of these are going to be reduced dramatically, like general and administration. They mentioned it, that they're going to reduce the amount here. And then the sales and marketing will be reduced, like a little, like definitely a lot, they said, but not like cut by in half, but it's going to be reduced because, you know, this ramped up really high is because they were preparing for the Canadian rec market. Acquisition cost is going to be completely gone, because that was for, actually I heard that, no, actually I'm not too sure about the acquisition cost. It's either going to be reduced quite a bit, or it's going to still be around, because they still have to merge with ICC and IATA Labs, so the acquisition cost could still be, I say, halved. So I mean, if they're going to be cash flow positive, I say that the expenses next quarter is going to be probably $70 million. If you take away, it's like, I think share-based payments might be reduced next quarter. Because, you know, last in 2017 there was barely any share-based payments, so it might be reduced next quarter too. So I would say $60 or $70 million. So they're probably expecting revenues in the hundreds of millions, like 100 million, being cash flow positive of $20 to $30 million. At least Cam Batley said they're gonna be cash flow positive. We'll see what happens, but I think the next quarter is going to be we might have a nice pop, but right now, because of the market volatility, I say that the stock will probably decline to $8 and below. That's just my opinion, yo. I'm sorry to say, you guys. So, okay, Canopy. What do I expect for Canopy's earnings report tomorrow? Do I have Canopy here? Canopy, yep, I have Canopy here. So this was their last earnings report. They announced $25 million of revenue. If Canopy might include more rec sales than Aurora, because they have tweet stores, so they might, you know, sell. I don't know. Actually, I am not sure. So I don't know if Canopy is going to have the same amount of revenue. Because, like, if we didn't have Canadian rec sales, I say the revenue would be around $28 million. So, and then if the maybe $1 or $2 million of rec sales, so we could see $29-30 million for next quarter, slightly above Aurora. That's my prediction for tomorrow. I predict around $30 million of revenue. So we'll see what happens though, and they will definitely be a loss, because like they had an operational loss of $90 million last quarter, so $93 million last quarter. So I mean, they spent a lot of money on the rec markets, so because their packagings are nice and fancy, so I would say that, you know, they would still lose money. It wouldn't be as bad. It wouldn't be $93 million. I would say it's going to be like $50 million. They're going to make revenues of $30 million, and they're going to lose about $50 million. We'll see what happens. This is my prediction. Like, looking at the tweet stores, this is in Brandon, Manitoba. It looks like it's winter outside, and people are lining up to buy weed in Brandon, Manitoba. And Brandon doesn't have a big population, and there's huge lineups. Shows a lot of support for weed. Like, I think the weed market is huge in my opinion. These when they announce these numbers, when Canopy announced these numbers next year, when for a full 3 months of rec market, those numbers are gonna be huge, just in my opinion though. So because you know, when I look at the stores, every store I go to always has Canopy products on hand. That just shows how much inventory they have and how much weed they're producing right now. So and Canopy is the only company that is right now that I'm aware of that sells their own, like they have their own stores. They have their own branded stores. No other licensed producer have it. Aurora has liquor stores and they have Joom, but those are not part of Aurora. They are more of investments that Aurora made, so they wouldn't be included in Aurora's revenue. While Tweet, the Tweet stores, they have t-shirts, they have pipes, they have bongs, they have so many ways to generate revenue in their stores besides just selling cannabis products. So you know, Canopy is gonna have massive amount of revenue numbers because they're the only company right now that have stores that, you know, that's run under, like within the company and not an outside source, like an investment with Aurora, with Joom, and what's that other company called? Liquor stores. And Canopy has $4 billion. They can open stores all over Canada if they wanted to, and they could generate tons and tons of revenue. So I'm a big bull on Canopy versus Aurora, just because the sheer amount of cash they have. And you know, I wouldn't say management is stupid at Canopy. I think management is very smart. You know, these are pretty nice looking stores. Looks like they put at least $1 million of renovations to make the store look this nice. And you know, they're also selling merchandises like t-shirts. So that's branding and money on top of that. So revenue, those t-shirts are generating revenue. Each t-shirt's what, like $10, $15? Well, what's the profit margin on a t-shirt? Like, okay, it costs about $5 to make a t-shirt and they sell for $10. So they're making about $5 profit. I mean, they could charge more for the t-shirt. It could be like $15 for the t-shirt or $20 for the t-shirt. So, and then it also helps with their branding too, right? People walking around with Tweet t-shirts, definitely gonna be a good branding method. So just kind of wanted to point that out with that picture. Tomorrow, early in the morning, Canopy is gonna be reporting their earnings report before market opens. So I don't know. I think it's gonna be a bad day. I would be very shocked if they actually came up with numbers that is like stellar and they were actually profitable this quarter. I don't think so. I mean, if they do, it'll probably rally the entire market. But if they don't, then you know, and for EPS, you know, 12 cents minus 12 cents. I think it's gonna be a little higher than that. I think it's gonna be like 40 cents. Just saying. I don't know for sure. That's it for my video. Thanks for watching, guys. It's a long ass video. Oh yeah, it's a long ass video. Thanks for watching, guys. I should really remake this video, but whatever. But see you later and give me a thumbs up. Bye.